Europe trades higher, the dollar is weaker, and futures on Wall Street point to a flat open in front of U.S. data expected to show the economic recovery is strengthening. Key data include Case-Shiller home prices and consumer confidence. All eyes this week will be focused on Thursday's Italian bond auction. In corporate news, Sears Holdings said it would close over 100 Kmart and Sears stores and take Q4 hits to the balance sheet and miss quarterly comps. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. So here we are, last week of the year, thin trading, but it does not mean that it's time to go to sleep. We have a lot to look forward to. We have Case-Shiller today, we have consumer confidence, and all eyes will be on Thursday's Italian bond auction. Yeah,
so there's still a lot to look at, and a lot of people are saying, oh, Santa Claus can come. I'm like, did you fall asleep last week? Last week was the week that if you positioned well, if you happened to be here, because I know a lot of traders are on the beach or in their ski resorts, and if you were here, you really were rewarded because we had a nice 4-day stretch. A nice 4-day stretch that was a methodical trade for those that like to actively trade, and also for those that position for more of a swing type move.
So where was it last week that was the point you had to get in?
Well, last week on Tuesday was that big igniting bar. And if you didn't get in on that day, you had the day that Oracle disappointed and you had the pull-in. So if you look at the chart of the S&P, you will see it right here. Take a quick look. I always talk about igniting bars because what do igniting bars do? They ignite a move. We all know the frustrating, trade that went to the downside that wound up holding here. You had the October low, the November low, this became the December low. So here was your igniting bar. This was the day after when Oracle had the disappointing numbers. You could have bought that dip that held higher. And then Thursday, Friday, you had some nice follow through. So the question is, going into New Year, where can we go? Can we take out this 1277 or can we even take out the 1292? I think, Jill, that maybe we'd be lucky to take around the 1277, but in order to get through that October high, we're going to need some new inflows. We're going to need traders to come back from vacation. We're going to need guys to get their allocations for next year to have to chase a bit to take out that level for what could be a 13 handle going into the first quarter of 2012.
Speaking of what's not a really interesting theme that we saw this year, and this is for the sector spotlight and the trenches, Santa's naughty and nice list. For the sector, we're going to look at the nice list. These stocks have clearly outperformed the market. Look at Apple, for example, almost by 20%. So does it make sense to add to these positions or pull back or short a little bit because their multiples are so high? Same thing with the trenches. Are we at levels right now where it makes sense to get in and the oversold situation is done?
Well, it all depends on your time frame. For macro investors, I think they've been in a tier 1 Apple position ever since earnings. It hasn't acted great, but lately, as a trade, it was awesome. If you look real quickly at the chart of Apple, you will see that this was a nice move for traders, right? Here you go from about 385 it ignited all the way to 403. Now it has big resistance coming in at 410. So a trader got rewarded last week, and if you're an investor, you're still just sitting in a nice trade. But if you're an investor in ISRG, which is a high multiple stock, you could have got paid as a trader and as an investor. Look at the chart here of ISRG. We've talked about it many times. New highs, 457. This was your clearing point right here. So there are stocks that are definitely rewarding you, and then the stocks that are on the naughty list,
right,
they got battered and bruised, that you weren't caught in the carnage. Yeah, maybe there's a trade next year in GMCR or Netflix or some of the ones
like
that you had.
Amazon.
Exactly.
Right. Okay, so we'll take a look at our naughty and nice list. We're also going to look at some quick hits for quick cash in the longer version of the morning call. So really the theme for this week is, even though it's short, even though everyone's on vacation, it doesn't mean that there's not a trade somewhere, and you can't get lazy on this light volume. We have a really exciting morning call lined up for you as well. We're going to look at the retail space in particular tomorrow following yesterday. I don't know if you were out, but I mean, if you saw the lines on the Turnpike or on the Parkway, people were shopping and really excited to use those gift cards. So
yes,
retail could be exciting. And then on Thursday, we're going to have your 2012 outlook in Google in particular.
There you go. So there's a lot to look forward to. So if you're here, pay attention. If you're not here, just go on the beach and don't even look.
Right, and don't forget, every day, catch Scott's daily wrap-up on the charts on T3Live.com and optionsprofits.com.
Hi, I'm Sean Hendelman.